Today I want to talk about how we're responding to the European crisis that's going on. Now, interesting, the reason I'm talking about this topic is our viewers have been emailing into me the topics they would like to hear about. So as you listen to this, if you've got additional questions or you'd like me to expand on the topic or you've got another topic you want me to talk about, feel free to email me because this is what happens. I'll talk about it. So how are we responding to Europe? Where I'm going with this is that lately, if you've been watching the U.S. stock market, the stock market has been going up. Well, the example I would give you is like a rocket that took off, and all of a sudden the rocket gets up to a certain point and loses fuel. It can no longer fly, and it's starting to come back down. That's what we think is happening right now in the overall world economy, as well as in the U.S. economy. But impacting that is Europe. Europe is a big trading partner with the United States. It's a big trading partner with China. Case in point, 30% of China's exports, go over to Europe. That's a lot of revenue. If the European Union cannot come together to decide how they're going to handle their currency and their monetary policy, then eventually they're going to have to break it up. The problem you've got is that the banks own a lot of their own debt from the government. Spanish banks own Spanish government bonds. Italian banks own Italian government bonds. If the governments are having a hard time supporting that debt, well then that in turn impacts the banks. As it impacts the banks, guess who's been loaning money? Guess where the people are depositing their money? That has another problem. When people see that their savings are at jeopardy and when they see that the currency they're used to buying and selling is in jeopardy, they start to convert that currency like the euro into dollars, into a currency that they feel like they can count on. The problem is Europeans are stopping buying products. In turn, the rippling effect across the ocean, the United States, multinationals start seeing that their sales are down in Europe. That impacts their earnings. They don't hire. They don't create innovation, create new products. It's a rippling effect. So we have gotten very conservative in our portfolios. We are looking to see how the stock market could very well trade back here. We are watching day to day in hopes that if things do trade back, that we've got plenty of cash available to go in and apply a philosophy of buy low, sell high. So hopefully this is giving you some information. There's a lot more details that go with it, and I'm more than happy to talk to you about it, whether you're a client of ours, and if you are, we've already been talking about it. If you're someone who's not having dialogue like this with your financial advisor, then you need to call me and at least get a second opinion to understand how we operate and how we view things. Thanks again, and especially to the viewer who emailed me the question about this. Look forward to hearing from others. Thanks.